Good morning, UPBOptionMillionaires.com. It's Thursday, December 11, 2014. Stock futures are off their lows from yesterday, seeing a bit of a bounce, but we're pulling back. Here it's about 2 hours before the market's going to open for trade, and the question we have here is, are we going to find support at this level right here? We pull it all the way across the starts in September, and if you pull it across, this would seem like pretty solid support here for the S&P 500 futures. If not, I'm also looking at this scenario as a possibility of this is the record highs, okay, and a similar scenario is we're right here of a move down to not, I wouldn't say this level precisely, but we'll put in a higher low, and maybe it'll end right about here or so. But remains to be seen. We could see a nice bounce to start the session today, and we'll see if that continues onward. If you look from the Abenomics trend line, which we've been watching for many, many moons now, we briefly broke below it in October, so that really sharp snapback rally. Again, if we break through here, I mean, the more times we break this trend line, the better odds we're not going to get back up to it for a long time. So we'll see if we can hold here. We're really close to it. It's, right within reach for the bears. They want to push this market lower. We could see a nice pullback below that Abenomics trend line, and that would lead to significantly lower prices, again, which would lead us down to about the 197 level here in the SPY. At least in the short term, XLE is breaking down. I pointed this out in the first swoon back in October. We had the big pullback. We briefly breached the $80 mark, which was acting as long-term support. This goes back for 10 years. And then we saw the snapback rally. Now, if you look at this, this is a beautiful bear flag. If you flip this, transpose it, this is a bull flag, but when this downward action, so this is a beautiful bear flag. And you see how it resolved out of it to the downside. We broke down, and I was looking, I put a chart up at StockTwits, you can check it out. Before it broke 80, I said it was going to head to 76, and look at where we are, we're at 75.85. And I think that we could see continued weakness, especially if oil continues to drop, and I brought this up as well. 2250, I believe, is the long-term support here for USO. You can see this line here, you're at 2258. This goes all the way back to 2009. We're right there. We came really close to it yesterday. We're bouncing here pre-market. I could pull up crude oil real quick and I'll show you what's going on. Crude oil futures are bouncing. Doesn't look like much of a bounce. Look at this move down. I mean, back in June, it's funny, everybody's talking about now how, oil's going to be stuck at 60, 50, 45. Where were they back here just 6 months ago? I mean, how great would it have been to know that back then? And you could have just bought some puts on USO and you've just been buying a little extra Christmas presents for the rest of the family. But if you look at the decline here to the downside. USO is pulling back. But if you look short term here, we're seeing a bit of a bounce. We hit our lows yesterday. Crude oil futures were up about 1% to start the day this morning. Let's look at some other stocks. Talking about CAT about a week. Actually, it was exactly a week ago, December 4th, 2011. I was talking about it not being a $100 stock for quite for not much longer, and you can see the move at that time was over $100, and ever since it's been an absolute tailspin. I brought them up in the blog at Option Millionaires. The $95 puts this weekend were 17 cents. They went down to 16 cents. You could have got them in the 20s on Monday, and look at the pullback we've had. I think from a long-term perspective, I think Caterpillar is going to continue to decline. It's broken the $95 support level, and it's going to get into the 80s over the next month or two. John Deere, same thing. We're looking at this action here coming up to long-term trend line resistance. It didn't even make it up there, and I think we could see it move back to 80 on Deere. I was talking about Triple M on Monday. For a pullback, it was at 161. Let's just I'll show you the last 5 trading sessions. The 157.50s were 22 cents at the time. They're 80 cents now. And you can see this is Wednesday, Tuesday, and on Monday I was talking about it right here, I believe it was. It had a nice little bounce. It was intraday. You can see the continuation to the downside, and it filled. And let's see how these gaps get filled. You can look on Wednesday, the gap got filled, and then just a really nasty day yesterday. And that's likely to continue here. I was talking about this, this parabolic move. So we could see a pullback down to 150. Same thing I'm seeing with FedEx, which analysts actually came out today and downgraded to neutral, saying that it's pretty fairly valued. And you can look, I think it's going to head down to this 172.60 level. Everything's hunky-dory and happy when it's going up, but when it pulls back, everybody gets on that same kind of momentum trade, and I think it's going to head down to 172.50. Same with UPS, I think 109. 108.50, 109, this support, this former gap up level that we had back at the start of the month, I think is going to act as support. I mean, if it breaks that, we could be looking at the nice round $100 figure as support. Apple is breaking down. It's been 2 weeks of declines. If you pull up a weekly chart, you can see these two big candles to the downside with nice wicks. So there's still some buyers in there bringing the price off its lows each week. If you look from a 9-month chart, to me, we're still not completely oversold here. So I would look possibly for a move at least down at a 110 level this week. That seems to be support, with support 2 days ago. Google has been falling to pieces. That 550 level on GOOGL could not hold. So now we're contained between that as resistance and support down here at about the 510 level. And I think if the weakness continues here for stocks, that could be where Google is headed as the week progresses with 2 trading days left in it. And FCX, I've been talking about this one for many years. Financial crisis was falling to pieces. They eliminated their dividend and then magically ramped up to new record highs. And now is looking rather bearish here as we break through long-term support. Each time FCX has hit this support line, which at one point I thought was a shoulder line of a head and shoulders pattern that was going to lead to lower prices, it kind of fooled me there for a year and a half. And now it's starting to act like I thought it always would, which would be a pullback down here to about the 1750. And I think, again, as I brought this up in recent videos, I think this is a CLF, WLT waiting to happen, but only time will tell. And so we did USO, JP Morgan Chase. I brought up, I put the chart up at the blog at optionmillionaires.com. This channel remains contained here, and I think the stock is probably going to head back down to 57.50 to hit the support, which it's done pretty much every month over the last 9 months, and then ultimately going to make its way up to new record highs. Same with Goldman Sachs, which is broken out. I think a pullback here to support before it heads higher. We already talked about XLE. Let's look at the NASDAQ. And if you look at it as a support, just as we were looking at the S&P 500, we do get a pullback. That round $100 figure is going to act as support. And the VXX has been rallying. It's up 10% yesterday. Look at this chart. Again, from the long term, if you're in the VXX, you don't want to be trading it long term. You just want to get in for these bounces. We had a bounce in October. We're up to 44. We're starting to see the move up. How long it lasts? Probably not too much longer. But if you're trading for volatility and you want to get a VXX, don't be holding it more than a day or two, because this will get beat down again at some point, like it's gotten beaten down every single time it rips in the past. The question is, from a short-term market chart here, are we forming some sort of a right shoulder on a left shoulder ahead? And that would send VXX down to 20, which it's ultimately is going to happen. It's just inevitable. All right, UPB, optionmillionaires.com. I'll see you in the chat room. Everyone have a good trading session. If you're trading for downside this week, you're doing pretty good. And I was talking about this in audio at the Option Millionaires chat room for many weeks now, how volatility was pretty low. If you look at the VIX, up almost 25% yesterday, the volatility index. And if you look back, I mean, nobody was really trading for any of these moves to the downside that we're seeing the last couple trading sessions. So some of these options, like the Caterpillar 95s for 17 cents, went to $2.22. On the long side, JB at Option Millionaires had alerted in the morning GMCR calls. GMCR rocketed higher. Yesterday, that's a 4-hour chart. And so there is money to be made still on both sides of the market. Look at this long trade if you got into GMCR yesterday from 132 to 141, a $10 move. All right, again, I'll see you in the chat room. Everyone have a good trading session. Goodbye.